Welcome, everyone, to Buy, Hold, Sell. I am your trader, Todd Schoenberger, joined by my friend and co-host, Tobin Smith, out in sunny and hot Scottsdale, Arizona. And Toby, I don't think we've ever had a more important show than we're having today, because we have Jim Bianco. He is the president of Bianco Research out of Chicago. He is joining us, though, on the show to talk all about the Mar-A-Lago Accord, because he has been front and center on this news story. Jim, welcome back to Buy, Hold, Sell.
Thanks for having me.
And you're in Northern California, which is even more perfect right now, right?
Yes.
Just
right.
Wearing my Birkenstocks and eating granola.
Yeah, exactly. The gravitational pull of liberalism and granola has got you, right in the vortex.
Right.
Well, Jim did take a trip out of Chicago. I'm sure it's very cold and snowy there. Went to Northern California. That's where he's joining us today. Jim, I'm going to start off because the audience, we put out a promo piece about this show, and I had a lot of people coming back to us who are Wall Street celebrities, if you will, who were asking me, what's the Mar-A-Lago Accord? So I'm going to hand that off to you.
It's a name given to it by Steve Mirren, who is the President's Council of Economic Advisors.
Right.
He wrote a report after the election in November, and he talked about reorienting the global trade system in order to make it more fair. The idea is
more fair to the United States.
More fair to the United States,
okay.
Yes. The idea is to lower the level of the dollar. It has several parts, and a lot of them have happened. You'll recognize some of them. Step one, tariffs. Tariffs are all over the place, both for revenue and leverage. Leverage being 10,000 troops on the border in Mexico, with the threat of tariffs. Step two, sovereign wealth fund. If you think like a private sector guy and you say you got too much debt, the first question you ask is how much equity is backing it? Well, is there something we could do to increase the total assets or equity? Let's create a sovereign wealth fund. Let's move federal real estate and gold and Bitcoin into this thing and value it at market value. That could be trillions of dollars that we could use to offset the debt. Step three, how do you lower the level of the debt? Well, you need some new revenue sources. And the traditional way is, and I'll say it bluntly, the traditional way is, yeah, we got to get the guy from Peoria or the guy from Cleveland, and he's got to pay more. He's got to do with less, raise the retirement age, make him pay more for Medicaid or something like that. Or his boss has to pay. Well, there's two problems with that. One, okay, I'll wave a wand. They're going to pay more. You haven't fixed the problem. It's too big for that. Step two, it's an America First policy under Trump. He doesn't want them to pay anymore. So he's looking at the $36 trillion of debt and he's going, what wrecked all this debt up? Defense after World War II. We defended the free world for 80 years. We never got paid for it. He wants to get paid for payment for security. Now, literally today, 10 minutes before we started,
right.
Trump started talking with Macron, president of France, in the office with him. And they started basically talking about, we have to get paid. We need a better deal. So, and Europe is talking about, okay, we're going to spend $3 trillion on defense. And so the idea there is, all right, maybe then if they do that, we could spend less. We could get our troops out of Europe. The whole point is to bring down the level of debt, make the trading system fairer, bring down the level of the dollar. So when people ask about the Mar-A-Lago Accord, there was one part in it about a debt swap. And that would be getting Europe or the NATO countries to give us all of their treasuries, and we would give them a 100-year coupon bond. All right, maybe that happens, maybe it doesn't happen. But basically what that is we know they're going to pay. That's just a form of payment. So maybe it isn't that form of payment, but they've seemed to agree to have paid. Now, all of this is designed to reduce the deficit, less spending on defense, reduce the level of debt, make the trading system fair, bring down the value of the dollar. That's what the Mar-A-Lago Accord is. Why does it have that name? Because Bretton Woods was named after a resort in New Hampshire where they crafted the deal. The Plaza Accord was named after the Plaza Hotel. They tend to name these things after hotels, and that's kind of where the Mar-A-Lago name kind of came from for it.
Well, I mean, again, so there's like a couple of immediate aspects to it. I think a lot of investors, certainly Americans, don't quite understand that when the dollar goes down in value against our trading partners, it actually helps our companies sell more because the price paid goes down, right? So that's stimulative. The other part of this that sort of got me was that since we hold our gold bars at $35 an ounce valuation,
42,
yeah,
but the same point.
Yeah, that maybe if we just actually brought them to a normal level here, that all of a sudden now this upside down is at least getting even. What do you think about the gold issue?
Well, first of all, Secretary Bassett was asked about it, and he said he hadn't thought about it, that's what he didn't have in mind, is what he said last week when asked about it. And I was jokingly thinking, well, we have it in mind in 2 weeks.
Yeah.
But I think that the idea is, because the idea came from him when they said, we're going to do a sovereign wealth fund. Here's the problem, right? Everybody that has a sovereign wealth fund is a creditor nation. What does that mean in English? They get revenue from something, and all this money piles up, and they hand it to a bunch of managers and say, invest it. The Norway Sovereign Wealth Fund, the Gulf States Sovereign Wealth Fund, even there's one in the United States, it's in Alaska, the Alaska Permanent Fund.
Yes.
What do they all get their money from? Oil revenues.
Oil.
They get oil. They're a creditor. They get money. We're a debtor. We don't have money flowing in, excess money flowing in. So when Besson was asked, where did we get the money? He said, we're going to revalue assets. Okay, so the federal government owns a lot of real estate. It owns Mount Rushmore. It owns 8,000 tons of gold. It owns 207,000 Bitcoin. You're going to move all of that stuff into the sovereign wealth fund, or some of that stuff into the sovereign wealth fund, value it at market levels and say, look, now we have this fund with trillions of dollars that can offset the debt, or could be collateralized in some borrowing to buy TikTok or whatever they want to do with it. That's what we're coloring in the lanes with. Now, in fairness, Besson said, we'll get back to you in a report later this year as to what that means. All right. Well, we're trying to guess what revaluing putting the assets of the United States balance sheet to work. Those were exactly his words. And so this is probably what he means with a sovereign wealth fund. Otherwise, if you look at the Gulf States or the Alaska Permanent Fund, we don't have some kind of revenue source piling money into the U.S. that we don't know what to do with. So we hire a bunch of managers and say, go invest it in some stocks. Yeah. They do, the Alaska Permanent Fund or the Gulf States or Norway. So we're a debtor nation. So all we've got is assets that are not being properly valued. And if you did that, it makes the debt pile relatively look a little smaller.
And that would help the valuation of the dollar, or it would suppress the valuation of the dollar. Now
I think it would cause the value of the dollar to decline. Now, one thing to be clear about with the dollar is that when Besson talked, he talked about two things. He talked about that they're committed to a strong dollar policy, but then he said, but we're not going to allow other currencies to weaken. So let me try and interpret that. We want the dollar to be the most important currency and the reserve currency of the world. Okay, that's what strong dollar means. Now that I've said that, the value of it could go down, but it was, the exchange rate could go down, but it's still the most important currency, and it's still the reserve currency. So that's what I think they mean by strong dollar. They don't mean that they want the value of it to be higher. They want the importance of it to remain.
Well, I mean, obviously oil settles in dollars, gold settles in dollars. Most of the commodities in the world settle in dollars. So you're not saying, but I heard some people saying that that's the next thing we have to do. No, I mean, are you kidding me? You're exactly right. That as a reserve currency, what that really means ubiquitously is that 30-year bonds, you got to buy them in dollars. You can't buy them in yen. You can't buy them. You have to convert. Same thing. And it's the most liquid thing in the world. That's why it's the reserve currency, right?
We have had rule of law for 50 years. We have trillions dollar deep derivatives markets on the dollar and our interest rates. $5 trillion a day trades of dollar assets every single day around the world. That's why the dollar is capable of handling hundreds of billions of dollars of transactions every day without interruption. With that, and that rule of law is very important. Okay, find me something that can do that other than the dollar. It's certainly none of the fiat currencies are even remotely close to being able to do that. Not the euro, not the yuan. The Chinese don't have rule of law. The euro is not big enough, doesn't have deep enough capital markets. So the idea behind that, the dollar losing its reserve status, I agree. It will the day you tell me there's an alternative. There really isn't an alternative. If you tell me it's gold or it's going to be some basket of commodity, you don't understand how international trade works.
It's going to be Bitcoin, Jim. Come on, we all know it's going to be Bitcoin.
It could be, and I'll be open with you. It could be, but it's maybe 10 or 20 years away. It needs to develop 100 or 1,000x deeper than it is now.
Absolutely.
But in theory, it could be, but it's in its infancy if it ever gets there at all.
Yeah, no question. So Jim, then, I'm sort of every day going through like this deja vu all over again of well, what's the next bomb going to be blown up today? What's the next system going to be blown up today? What's the next, tradition going to be blown up today? And for me, this is the first time in a long time managing money for people that I, had a call yesterday with a variety of clients and said, guess what? Until we get some fucking idea about what's real and what's not real in this whole barrage of daily, concussion bombs going off, we're going to be 40% in cash, in very high yield, 5% note paper stuff, because there's no way for me to make a macro case about Trumpism. I can certainly go say that, look at, the top 10% of people by income are doing almost 50% of the consumer spending, and the top 25% are doing 80% of the spending. So our consumer economy is fine. On the production side, who knows what tariffs are going to stick? I mean, we're doing 50% tariffs against Canada. Did I mean 50%? I'm sorry, I meant 20. No, I meant 10. That doesn't make people stable. That doesn't make people feel like they want to take a position when every goddamn day there's some other, crazy shit that comes out, and then it gets rescinded, and then it gets, how do you deal with it?
Yeah, that's why I brought up the Mar-A-Lago Accord, and I was as surprised as you as to how many people got interested in it.
Yeah.
Because people are looking at what's going on and going, oh, they're talking about tariffs over here, and that might be inflationary, and the Fed is going to sit on hold and wait and see over there. And over there in this corner here, they're talking about a sovereign wealth fund, and over there he's talking about making peace with Ukraine, and he wants 50% of their mineral rights. No, these are not three disconnected events. They're all part of a larger whole. It's an America first policy. And start with the idea that Trump is saying Americans have had a bad deal from Europe, from NATO. We've paid. We've got $36 trillion of debt. I'm not going to ask the person in Peoria or Cleveland to do with less or pay more taxes, or his boss to pay more taxes.
Yeah,
I'm going to turn to the people that we've kept safe for 80 years and say, you have to pay us now. Is that a mafia protection money scheme? If you want to look at it that way, I could go the other way and say they've been free riders for 80 years.
Yeah.
And it's time that they step up. And you know what? They agree. They've already floated the idea of $3 trillion of spending to beef up what they'd call the European Federation defense. Friedrich Merz, who was going to, after the elections in Germany yesterday, we're talking the day after the elections, is already saying we need to have an immediate meeting now to increase defense spending. They've already said they're going to do it. And I give Trump credit for this. I mean,
right. We've sort of pussyfooted around this. He doesn't know what a pussy or a foot is, I don't think. And
I think he knows what the first one is.
Yeah, probably. Yeah, I guess I remember. I just got Melania's new book. Somebody sent it to me. I can't wait to give it a quick
You
read.
brought that up. I didn't.
Yeah, right. So the other, issue that we sort of never talk about is that, and better than anybody, as these 2% 10-year bonds roll over and are now at 4.5% or 4.75%, whatever they're going to roll over at, then that deficit is not just what it is today, because we're going to have to make, we already pay more in interest than any other issue. Now we're going to be paying more interest, as much as, based on my numbers, about 36% more in interest, and there's no more income coming in. So what happens then?
So over the weekend in the Wall Street Journal, Niall Ferguson,
Yeah.
the economic historian, wrote an essay quoting another Ferguson, Adam Ferguson from the 17th century, who said that when a country pays, he said this 300 years ago, when a
Yeah.
country pays more in debt service than it does in defense, it stops being a great country. And Neil Ferguson, went through the last 300 years and said every time that happens, it's true that they wind up not being a great power anymore. We crossed over 2 years ago,
Yeah.
and we are now paying more in interest expense than defense. And so this is part of the whole payment for security. Our security is tied up in getting that interest cost down. It is a security risk. We have to get that down. And so a lot of people that scoff at this Mar-a-Lago Accord thing, I ask them a very simple question. Do you think we're having a crisis or on the precipice of a crisis with the debt, the deficit, and everything else? If the answer is yes, then remember the definition of insanity, doing the same thing over and over again, expecting a different result. So don't come back to me and say, we need to have more hearings about raising the marginal tax rate or adjusting baseline budgeting. That shit hasn't worked for 50 years.
Right.
So let's try something different. And that's what this whole payment for security, using tariffs to probably level the playing field, potentially a sovereign wealth fund to increase the total assets of the United States to offset the debt that we've got. Can it work? Sure, it can work. Will it work? It depends on whether or not Trump has the political capital. And I'll give you one other thing I'm worried about. Let's say they do all this, and let's say they reduce the debt down and they reduce the deficit down. Speaker Johnson over the weekend said, when the Doge committee said, well, maybe we're going to send everybody a $5,000 check. We're going to save so much money through Doge, whether they do or not. He said, but we should pay down the nation's credit card, meaning paying down the debt. What I'm afraid of, and I'm going to get in trouble for saying this, like some of my kids, oh, you mean that their credit card is no longer at the limit? No, that means I got more spending. I could go right back to the limit. So what I'm afraid of is we do this, we bring the debt down, and then Congress says, oh, so we've got room for my pet projects now. So let's load it back up and go right back up to that limit again. And that could be very inflationary, and that could really send interest rates to the moon. So it's not just enough to bring it down. You got to basically convince Congress for all of time, don't go back to the limit again. And I just don't know how you do that.
There you go, Jim. Get some of this hit off this thing.
Hey, Jim, I have a question for you. So you've been on the forefront of this story the last 72 hours. Has the Trump administration or anyone from the administration contacted you?
I can't, not in the last 72 hours, but I've been talking to various people in there about this, including Mirren himself and some other architects of this policy.
Well, let me ask you this one then. You and I are old enough. I don't know about Todd. Sometimes he looks like he's like 15. Sometimes he looks like he's 65. But there was this thing called the bond vigilantes back in my day. And we went through this whole, George Soros and all those guys shorting the dollar and attacking, et cetera, and making stupid money doing it, right? Are the bond vigilantes just impotent right now? They can't go after us?
By the way, just a quick fun fact. Who gave him that name? Is Ed Yardeni.
Yardeni, yeah.
Yep.
How about
and,
that?
I was a Merrill Lynch guy at the time he did it. So, yes, I know that well.
No, I think the bond vigilantes are still there. And I think that that's one of the reasons why you're starting to see the things, use some technical terms like the term premium in bonds is increasing and yields are going back to well above the inflation rate, because they see the potentials of risk out in the market. But a Mar-a-Lago Accord or something that could reduce the deficit, reduce the debt, bring that down, could calm the bond vigilantes. Again, the devil's in the detail. It's a nice idea. It depends on whether or not you can actually pull it off. And it's all part of, I understand, it's all part of everything else, with the Doge running through the government, firing people and canceling contracts and everything. The idea here is we have to do something. The idea is if we do nothing and say, we'll have a commission to talk about it and we'll discuss whether or not we're going to raise taxes by next year, then we're going to hit the wall. And that's kind of what their attitude is. And so I would, and I will quote you, Chairman Powell, from a speech 2 months ago in December. We are on an unsustainable path. Something has to change. Well, this is change. I know in Washington, they go, I didn't mean that. Well, you said we got to change. Right. We're not going to do the same thing over and over again and expect a different result. We're going to try something different. That's what this whole Mar-a-Lago Accord and everything. So when you see tariffs, sovereign wealth fund, payment for security, Europe is increasing its defense. Think in total, bring the value of the dollar down, bring the value of the deficit down, with throw in Doge in there too. Bring the value of debt down, bring the heat off of interest rates. It can work. Whether it will is an open question. And like I said, if you did it and you said, okay, we took the debt down, just to throw out a number, from 36 to $30 trillion, does Congress go, does that mean I got $6 trillion now I can spend on my favorite projects and take it right back to 36? That's the risk. That's the biggest risk of this project.
Well, remember, we've never, put any limits on it. Every time we just raise the debt limit, we raise the debt limit. I love your, the definition of insanity. And bond vigilance is just by definition, the debt is so big you can't short it. I mean, if they shorted $3 trillion of bonds, it wouldn't make any difference. When you did it in Britain and you shorted 50% of the pound sterling, it really made a pretty big difference, right? So it's almost,
right.
It's a virtual feedback loop. The larger the debt gets, the harder it would be to attack it with short interest, and the harder it is to attack it with short interest, the debt goes up. So it's a self-reinforcing, feedback. And then, of course, we don't have any idea about the Medicare and Medicaid, because my twin brother happens to be a payment specialist in healthcare. And for, 25 years, he sends a summary out to clients and so on and so forth that talks specifically about how, according to their real numbers, about 18 to 21% of Medicare payments are bogus, that they're paying off bills from bogus doctors. They have the Cuban hotel down in Miami, Florida, where there's 110 apartments and everybody's got a fax machine, and they send bills into Medicare and get paid, within 72 hours. Mm-hmm. I have not heard anything from Doge about, fake Medicare payments and how huge it is, and how the simple math there. You'd think if you had these crazy computer kids that they'd be able to recognize a recurring leg, that we must have lost 4 million legs in Miami last year to be replaced by brand new legs, because that's the number one scam they have going.
I think that the Doge committee, I'm going to presuppose that they would answer this by, we're getting there. We'll get there soon. But I'm more stunned with, Toby, that there's a second version of you, your twin brother. We got two of you out there.
Yeah, well, I used to be richer than him, and then he sold a company. So now I have a company I'm hoping getting IPO next year. Then I'm back on top. Okay.
Oh boy, that's great. That's great. Listen, we're going to leave it there, guys, because there's important news. The show is it's going to be airing tonight. So, and as everyone's watching, it's now. So that's great. So I wanted to, so Jim, thank you so much for taking the time today. I know you have a very busy schedule, especially with this Mar-a-Lago Accord story.
Yeah, well, I love the new office, Jim. I think your office rocks.
Thank you.
You should be in Northern California more, babe. It's huge.
All right. Well, here, for you guys, I'll show everybody. I took off the virtual. That's what it actually looks like in Northern California right now. But I'll go with this because it's more professional.
There you go. I love it. I love it. So on behalf of Jim Bianco, who is president of Bianco Research, go to biancoresearch.com to learn more. And we want to thank everyone for joining us today. And Toby and myself, and we'll catch you next time. We'll buy, hold, sell. Take care.
Cheers.
Buy, hold, sell, brought to you by Crosscheck Management.